This year is a hot year for IPOs, initial public offerings. And in fact, here at True North, my dad, Dave Wilson, he cannot shut up about Slack. He talks about Slack all the time. Ashley, have you heard about Slack? Hey Dad, what do you think about Slack? He can hear me through the wall. Today, I get a lot of questions about IPOs, particularly this year, because IPOs have been kind of dormant for the last several years. There haven't been that many, but then all of a sudden there's been like this explosion in IPOs. So we have Uber, Lyft, Pinterest, Slack, Levi Strauss, lots of companies that are going public this year and issuing stock for the first time. So it's kind of exciting. There's a lot of buzz. It's talked about on the cable news channels all the time. And so I start to get more questions about this. And so I wanted to cover in detail today IPOs and what you should know if you're considering investing in IPOs. My name is Ashley Micciche. I'm the CEO of True North Retirement Advisors, where we specialize in retirement and exit planning for business owners. Now, be sure to like, comment, and most especially subscribe. Please subscribe, share the love. You'll be alerted every time a new video comes out, which we've just changed the format, and we're going to be doing new videos instead of like 2 to 3 times a month. We're going to be doing new videos every single week. So I'm very excited about that. Hopefully I'll get a little bit better at doing these videos. We'll see. But in the meantime, today we're talking about IPOs. I'm going to talk about what makes an IPO a good investment, 4 qualities you should look for in an IPO, whether or not an IPO makes sense in the first place. Honestly, spoiler alert, I'm not actually a huge fan of IPOs. I'll explain why. And then lastly, I'm going to talk about a very little known fact about IPOs, and that is the lockup period. And then we'll conclude with some thoughts and some things you might want to think about next time you hear about some hot IPO that you really want to invest in. Let's take like the 30,000 foot view here and ask the question that needs to be asked. Is an IPO a good investment? I'm not sure. Okay, so the answer is it depends. Now, the thing to realize about IPOs is that, first of all, there's a lot of hype around IPOs. When most companies go public for the first time, they're in like this high growth phase. So there's a lot of clamor. There's a lot of people super excited because who doesn't want to get in on the ground floor of the next Apple, the next Google, the next Facebook? I want to give you an example of an IPO flop, a very well-known IPO flop. 2011, Groupon went public at an IPO price of $20 a share. A lot of people already were using Groupon. It seemed like a great investment. A lot of people jumped in and bought Groupon right after it came public. The stock went from $20 a share. It went from 20 to 26 in the very first day of trading. About a year later, the stock was trading at like $3 a share. That is not a rare occurrence. That happens more frequently than you might realize with IPOs, because once the hype, once the excitement is gone, reality sets in. And the reality with Groupon is that it was not worth a $26 or $25 or $20 share price. The stock was worth what the market will pay for it based on all the fundamentals, and the fundamentals say that Groupon is only worth about $3 to $5 a share. The 4 qualities that you'll want to look for in an IPO if you're interested are revenue, profitability, debt to capital ratio, and PE ratio, or price to earnings ratio. So in revenue, we want to look for, obviously growing revenues. Profitability, one of the major problems with investing in IPOs and why I'm not interested in them most of the time, is because companies that go public for the first time are usually losing money every year. Amazon was a perfect example of this for a really long time. They had negative earnings. They were losing money every year. Of course, we know why Amazon was losing money is because they were reinvesting and planning to take over the world. The other metric that's related to profitability is the price to earnings ratio. So you look at, here's the IPO price, here are the earnings, you take the price divided by earnings, and you see how inflated the stock price is. You want to know whether this IPO is overvalued or undervalued, if it's expensive or cheap. Okay, then the last metric that is important to look at is the debt to capital ratio. So how much debt does the company have relative to its total capital? The key takeaway with this is that you want to do your homework. If you would have done that with a company like Groupon, you would have seen lots of fruits from just waiting on the sidelines. The last thing I want to talk about as it relates to IPOs is that timing matters. Now here's why timing matters. First of all, I want you to realize 2 points about timing. One is there are a lot of people out there who invest in IPOs because they want to flip it, they want to make a good profit, they're going to get in and get out right away. And so as a result, in those early days and weeks of trading, the stock can be like, wow, crazy roller coaster ride because there's a lot of activity, there's a lot of buying and selling going on. Just know you are not going to get the IPO price. They're going to issue the IPO, whoever gets the shares, usually company insiders and uber rich people, will get the IPO price, and then after it starts trading, you have to get in right away to hopefully get something close to the IPO price. But the second point I want to make about timing, and this is very important, if you're going to invest in IPOs, you need to know when the lockup period for that particular IPO ends. Let's say I'm CEO of some company that goes public and I'm issued 100,000 shares of stock. There's a lockup period after the IPO starts trading where I cannot sell my stock. I have to wait a certain number of months. Usually it's anywhere from 3 to 24 months. If you think about it, it makes a lot of sense because it prevents the insiders of the company from just cashing out their shares immediately when the stock goes public, which could really cause the stock to drop pretty hard. Ask yourself, is an IPO a good investment? Does it make sense for me? IPOs are very speculative by nature, and so you want to be very careful. Number 2, you want to still be disciplined in what you look for and look for those 4 qualities that I mentioned. And then number 3, understand timing, how timing works, so you don't get burned when buying an IPO if you're going to go that route. Now, the last thing I want to mention that is super important about IPOs is that because they're speculative in nature, it's very important that you don't have more than 1 to 5% of your portfolio that's earmarked and dedicated for IPOs. If you want to play around, if you want to go to Vegas with your money and buy IPOs, that's totally fine. Just make sure that you're not putting all of your chips on the table, because if the IPO goes south, which commonly happens, you want to make sure that it's not going to be devastating for you or your portfolio or your retirement. If you want to learn more about IPOs, I dedicated an entire week's worth of tips to this topic on the 1 Minute Retirement Tip with Ashley, which you can find on iTunes or Google Play in episodes 211 to 217. That was IPO week, and I talked about this and a lot of other topics related to IPOs to help you decide if an IPO is right for you and what you need to know if you're going to invest in IPOs. So I'll link to that below. If you check out those episodes, subscribe to the 1 Minute Retirement Tip on Amazon Alexa, iTunes, or Google Play. You can check out the IPO tips, and you can listen to almost 300 other episodes related to retirement, not just on IPOs, but lots of other topics as well. So thank you so much for watching. My name is Ashley Micciche, and I will see you next week.